Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my morning comments on the stock index futures on the 9th of May. Now, the word of the day is going to be Feds, the FOMC meeting this week, and the chairman was more dovish. So the word of the day could be dovish, could be the Fed, should be Russia, but it's not. It's going to be the Fed. Now, we also had Philadelphia's Fed voting member, dovish as well. And what are they saying? They're saying that the third quarter and the fourth quarter is going to be a better economy for the United States, but for right now, they're a little concerned. Housing might be pulling back. Unemployment looked great. They should not be that concerned, but they are, and they're saying that they might extend from tightening, and it would go longer. They're not going to change the tapering of the quantitative easing, but interest rates on the short end of the curve might take a lot longer before tightening happens. So, with that in mind, the stock market should be rallying, and we've seen some minor rallies. Another word that we might be thinking about is momentum. It looks like the bulls are losing momentum to the upside. That's on a technical point of view, which we'll get to in a minute. Our employment reports, weekly and monthly, were very good for this week and for this looking back last month. Okay? Now, have said that, we should be stronger, in my opinion, on the way up on a technical point of view. Earnings is wrapping up. We beat the street more than not. NASDAQ, technology stocks are getting hit. Small caps are getting hit. They're dragging on the industrials. They're dragging on the broader index of the S&P 500. Future contracts, future traders are losing that buy the dip. Let's take a look at some of the technicals real quick. Right now we're around in the June contract. We're at 1864. We're down 7 on the day. I would have to say that there is a little support around 1860-ish. Better thought would be 1848. If we cannot hold 48, then we're going to get to 1832. In my opinion, if we close under 48 on a closing basis, that would be very damaging, but most chartists look at the 1832 level as very damaging on a closing basis. On the rally for the bulls, if you're looking in that direction, I would think that we would need a close either today or early next week above 1880-ish in that area on the June S&P future contract to give the bulls their momentum or their stride back in controlling the atmosphere of the marketplace. Of course, our old high, 1892, would be a target for resistance, and a close above that, then we're going to probably see 1920, 1925. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.